A lot of people seem to be shocked by today's price action, but if you are a loyal viewer of this channel, we've been talking about exactly this scenario for a couple weeks now, really since we made it to that 42K level. We talked about the ascending broadening wedge continuation pattern, where we would be at E in the event of a false breakout. And we did in fact have a false breakout looking at this chart now. In previous videos, we discussed 42,500 as a key support. And if we fail that, we could be playing out the move from E to F on the diagram. And now we are pretty much in the middle of a move from E to F. And the theoretical target is roughly $38,000. And now that we've gotten this pullback, we can continue the same analysis we provided for a couple weeks now, discussing this textbook ascending broadening wedge continuation pattern. And so I want to play this clip that I posted on Twitter, which was a clip from a famous trader giving a speech discussing really what we just saw Bitcoin do. He has an explanation for this, and it might give you some perspective on maybe how to regard these types of dips or how to conduct yourself on these types of market moves. So let's play the clip.
The best trades occur after the masses have been stopped out. Okay, and markets tend to move, and that's because the big fellas up there, they can't press the wee button and get in because there's just not enough liquidity there for them to get in size. So they have to, in fact, engineer 100,000 guys like you, sir. Pull you one way, your stop loss gets hit. That, in fact, sets off a sea of liquidity for them to get in. So even if you don't have the strength, or what I refer to jokingly as the testicular fortitude to buy at the level, if you can get in and you can see, using your cope here, you can see that lots and lots of people have been stopped out before you get in, then you're probably on the right side of the trade. The good trade's always the hard trade, always. Emotionally difficult. When it's time to buy, you won't want to. Okay? When it's time to buy, you won't want to.
So it's really interesting what he was saying there. We know that there's a lot of big players wanting to get into Bitcoin now. And he was saying that, you know, a whale can't just hit the little button and get in, right? They have too much money. They have so much size, so much capital that they need to orchestrate a market downturn, stop out hundreds of thousands of people, generate that sea of liquidity so they can scoop up the amount that they want to get. It was kind of like all of a sudden yesterday, Bitcoin was just started dropping like all of a sudden. It was like no news, no real reason. It was an orchestration, I think, of, you know, some big players who want to just free up some of that liquidity in the market to gather more Bitcoin. So this is, in my opinion, a bullish dip, because if you're looking at the Bitcoin chart, you know, it's a funny term, bullish dip, right? I know it sounds kind of moon boyish, but it's true. Look at this chart, guys. Higher lows are bullish dips. Higher highs, higher lows. And I went to ChatGPT and I said, hey, ChatGPT, what is an uptrend? And ChatGPT said, an uptrend is typically identified by higher highs and higher lows on a price chart. And so I looked at the daily chart. I was like, well, it's an uptrend, right? So you have to be able to identify the certain types of dips. So if we're dipping, you know, ask yourself, is this a higher low turning previous resistance into new support? Or, you know, are we even bouncing way above previous resistance? In this case, we were. 40K was the target there, at least for yesterday. You know, maybe Bitcoin's dip is over. Maybe this was the low and we're going to continue up. If not, well, we have an idea of what could happen, which was the analysis that we've been providing on this channel for a couple weeks, the ascending broadening wedge. And so if 40,000, which was pretty much the whole number target on this dip, doesn't hold, well, then you can expect a full retest to that C level here, 38,000 possibly, before a bounce and a run back to the highs. Of course, there's no guarantee that all of this is going to happen, but this is just the most likely scenario based on the textbook and based on my experience and what's going on. How do we know if this is going to be really bearish or something like that? Well, if we don't hold 38,000, we don't hold this trend line, okay, well then we're getting a little bit destructive and we should probably be looking for prices such as 33,500 or 33,000, the bottom of this formation, right? That B zone. That would be the actual target if we broke this trend line, about 33K roughly. But as of right now, there's no reason to believe that we would hit that price as long as we're maintaining 38,000. This is just, you know, a bullish dip It is an uptrend. It is a higher high with a higher low. So, I mean, if you're just looking at classical TA, using common sense, not getting emotional, this is just a buy the dip scenario. And I was talking about this today in the Discord chat. The big issue that people have in their head is that when the price is going up, they feel really attracted to it and they want to FOMO, they want to buy. It's like, oh, it's performing well, I want to get in. And then when it dips, they back off and they say, oh, it could go lower, I don't want to buy. This is the reason why most people are not very good traders and why it's so counterintuitive. It's because when there's red candles in an uptrend, that's the time to buy. You don't want to be buying into the pump. Basically, you just have to invert your impulses, right? Like that guy said in that clip, when it's time to buy, you won't want to. That's what he was saying, right? And when it's time to sell, you won't want to. So you have to flip your instincts a little bit when you're trading. And that can take years to accomplish. It's not easy to pull that off, right? You have to try and try again to get your mind right, to invert your impulses and instincts, right? So anyway, as of right now, as long as we're above 38,000, I have every reason to believe the trend is still intact and that we're probably going to go higher from here after we find support, whether that's here at 40K or at 38. If we bounce off that level, I'm looking for continuation to the falling wedge breakout target of 52,000. Or the 618 at 48,500. Yeah, I mean, guys, it's pretty simple. Higher highs, higher lows, uptrend. It's a dip within an uptrend. And if you felt FOMO here at 45, and now you're sitting there wondering, if you should sell or you don't want to buy, well, you should probably flip your mindset. These are the times when you can start to accumulate the coins that you want. If you have FOMO while the price is up, and then you have fear while the price is down, you're doing the opposite. You're not going to make it, right? So buy the dips as long as you are convinced we are in an uptrend, right? I'm not a financial advisor. So yeah, volatility is here. It's back. This is Bitcoin. In Bitcoin land, this is what we call a Monday. This is nothing. This is so normal. We're like way above our previous breakout point. We're still way above the previous breakout zone. This is still great structure. So anyway, hope you guys enjoyed this video, and I'll see you all in the next one. Be sure to like, subscribe, join the Patreon. Actually, I think we ran out of slots. It might be sold out. But anyway, I'll see you guys in the next video.